In Canada, our government provides us with a lot of services that help us enjoy a high quality of life. In order to pay for these, we pay taxes. Our tax dollars pay for things like healthcare, police, schools, roads, and more. They also help redistribute wealth so we can ensure we live in a more equal society. A main source of tax revenue is personal income tax. Canadians pay income tax to both the federal government and the provincial government in which they live in. We pay taxes using what is called a progressive tax system. People who earn less money pay less tax, and people who earn more money pay more. Levels of income are divided into chunks called tax brackets. When you start to earn more money than before, the extra income is taxed in a higher bracket. Let's use an example to see how a progressive tax system works. Suppose someone earns $95,000. Let's calculate the federal tax that they owe. Approximately the first $46,000 of this will be taxed in the first tax bracket at 15%. On the next $46,603, they will be taxed in the second tax bracket at 20.5%. On the final $1,792, they will be taxed in the third tax bracket at 26%. The tax rate progresses from low to high. There are 5 tax brackets total, with the highest tax bracket being 33% for income over $205,842. You will also pay provincial tax, which differs dependent on the province you live in. If you have an employer, they will deduct tax from your paycheck. When you submit your tax return, you will calculate if there is a difference. If your employer has paid too little, you will owe the government. If they have paid too much, you can collect a refund. If you are self-employed, you have to save money for tax yourself. Throughout the year, you will pay portions of the tax you owe to the government with payments called installments. These are based on what you earned the previous year. When you submit your tax return, you will calculate if there is a difference and either pay the government or collect a refund. You can reduce the amount of tax you pay by using tax credits or tax deductions. Tax deductions are amounts that you can deduct from your taxable income. Suppose you have $1,000 in tax deductions and you have $65,000 in taxable income. You will only be taxed on $64,000. Some popular tax deductions are RRSPs, moving expenses if you move for a job or to attend school full-time, and traveling expenses related to work. A tax credit is an amount that you can subtract from your taxes due. Suppose you owe the government $15,000 in tax and you have $1,000 in tax credits. You will pay $1,000 less, $14,000. There are some popular tax credits for tuition, interest paid on student loans, and for first-time home buyers. Tax is important because it allows us to live in the great country we do. It is also important to take advantage of the deductions and the credits the government provides so that you aren't paying more than you need to.